Welcome to Professor Temple Tree's market report on stocks. It has been a year since we began this journey of giving video reports. The journey has been very good. For the markets, 2017 was a very big year in gains, while 2018 so far has not been so good. As of now, the broad markets have been reaching for newer highs every day. This has been happening even with good amount of negative news flows that has been hitting the markets. Last week we had the Turkish economy go into a tailspin, which took almost all the emerging markets currencies into new lows. Even Indian currency went past 70 and has been staying there. In spite of all this, the stock markets have been going higher. Here, there is some good news. When a market brushes aside negative news flow, what it means is there is more positive news in the economy which has more strength and to be looked upon than worrying about the negative news flow in the market. This also means that there is good amount of upside left in the market now, so that people can invest and make good or gain those profits, or at least not be worried that there will be a big fall from here. In this year so far, the midcaps have had big pains. They have lost value for various reasons. Now, the gap between midcaps and the broader market has been narrowing down. As the SENSEX and Nifty have been reaching for newer highs since July, midcaps are still having about 10% gap from the peak they had in January. Generally, mid-caps outperform the large caps by a margin of 3% in a longer period. What it means is this 10% gap which we have in the market now, where mid-caps are lower by 10% from their peak, for those who invest now, this 10% is going to be an additional gain which can come in the next 1 or 2 years period. The SENSEX is expected to reach 90,000 by 2027. This is as per the World Bank report on our economy. If SENSEX has to reach 90,000 in the next 9 years, it should be growing at 10% compounded annually from here onwards. It might not be a consistent 10% every year. Some years it can have negative returns, while some will have big gains which will take care of the negative years. And by the time it reaches 90k in 2027, the average return would have been 10% on the SENSEX. And this means if somebody has invested 1 lakh today into SENSEX, it will be 2.25 lakhs in 2027. The same amount invested into mid-caps would have been or will grow to 3 lakhs by 2027. Because of the advantage that mid-caps have of the 3% additional return, as well as this 10% bonus that we have presently available in the market, when it covers up and adds with compounding, it will not be 3 lakhs for 1 lakh of investment in mid caps, whereas it will be 3.25 lakhs in 9 years' time. This means 225% of gains available in our market in the next 10 years. Take advantage of this opportunity and grow rich. Now, there is one unique opportunity available in the market now. All of us know that our PSU banks have been going through a bad phase due to their bad loans and cleaning of their NPAs. Now we are almost reaching the bottom of this cleaning phase. Soon, probably in a quarter or two from now, almost all the bad loans will get off the balance sheets of these PSU banks. From there onwards, even if they are not going to give any big growth numbers, their their average profit declaration will help strengthen their balance sheet and help their stocks to go to bigger highs from whatever they are at present. So it is good time to have some exposure into public sector banking stocks to make additional gains coming into your investments. And one more opportunity similar to this that is available in the market now is pharma sector. Pharma sector, in fact, has already started its journey after having beaten down for almost 3 years now. So, what would be the gains in these two sectors? Generally, when a sector goes up from its bottom, it almost always gives about triple the returns. That is, 100 will become 300 in the next 2 years. So, for somebody who invests in these sectors, he or she should be making an average of 100% returns in the next 2 years. So, why 100% when the sector is growing 200%? It is almost always impossible to corner the bottom and nail the top. So, giving some leeway for entry and exit, someone investing in these sectors should minimum be making around 100% in the next 2 years. And these are going to be sector calls, so volatility is going to be there. So be careful on that, because if you put all your money into the sectors, suddenly you wake up one day reading a newspaper about some bad news and then check your investment, you will be shocked and be cursing your decision looking at your portfolio and maybe taking a bad decision of getting out and losing the potential. So give mild exposure and help your investments have the additional gains that these two sectors are going to give in the next 2 years' time. People have been asking me when I say this, can we invest into 1 or 2 stocks in these sectors since they are going to give very big returns and these stocks should give us additional gains too? This is normal because it is human greed playing as always. I would suggest investing into mutual funds because of 2 reasons. One, mutual funds help in analyzing and picking up good stocks as well as churn out of bad stocks when there is a need, and also have a diversified portfolio which reduces tracking errors. Second, generally when people invest into stocks, the selection that you make 1 or 2 stocks may or may not be the best stocks to give the highest returns, and the motivation that is there when we start tends to fade away as days pass, and this investment what you do into 1 or 2 selected stocks in a sector have the chances of getting into bad returns. So invest into mutual funds because mutual funds today have almost all the sectors are covered in mutual funds. You can pick one of the funds in these sectors and be invested. Make your money have the best gains these 2 sectors are going to provide in the next coming years. Thank you.